The crypto market is absolutely getting hammered today. So, if you've been watching the crypto markets and you are involved in cryptocurrencies, you probably already know this because you're probably seeing red across your screen. As you can see, as I scroll down here, we're seeing 15, 20, 25 huge losses on a grand scale across almost every cryptocurrency. I'm not seeing anything in the green at the moment for the past 24 hours. And you can see overall the market cap has dipped below $2 trillion down to 1.73 trillion, a complete drop of almost 1.8 or 18.757% today. So you can see that just there. So that's what we're going to talk about today, the crash in the market and what we can do moving forward. Welcome back to the channel, guys, with myself, David, Millionaire Incorporated. Hope you've all been well. Hope you are actually learning and improving your lives. As you know, on this channel, I like to go through topics of wealth creation, investing, and general kind of self-improvement topics and stuff. So today's topic is going to be crypto because it has been getting a lot of attention lately, especially with Elon Musk appearing on Saturday Night Live a couple of weeks ago talking about Dogecoin. There's a lot of hype about Dogecoin going up to $1. Um, I think it got to like an all-time high of about 77 cents, give or take, um, but didn't quite hold that high and kind of dropped and has been dropping since. It's almost at 50% loss since then. So what I really want to cover with you today is things we can look at with the market kind of crashing or come tumbling at the moment. Are we in a bear market? Are we in a potential crash scenario, or are we? Is it just a correction? Now, there's going to be a few trains of thoughts I'm going to go through with you in relation to this because, from a technical analysis standpoint, I trade forex pairs, currency pairs, and I do a lot of my trading through technical analysis there. And similar things can apply to crypto. Similar things as well as the stock market can be paralleled in um, the crypto market. And as you probably know, the crypto market has been in almost a parabolic move, seeing like 50% rise, 50%, 100%, 200% weekly raises on some currency pairs, on some crypto coins, and no sign of it stopping. So if you understand parabolic moves, you know that over the long term they are unsustainable because they can't go to infinity essentially. They just can't just keep going up 10% day on day on day on day. The effects of compounding that scenario just doesn't happen. Wish it would, but doesn't quite do so. So that's what we're kind of seeing at the moment. So I'm quickly just going to jump over to a chart of Bitcoin. One second. So as you can see here, I've got Bitcoin on a daily time frame, and I've drawn in a couple of kind of support and resistance areas here, or horizontal lines, which I will explain to you in a moment. But I'm going to jump over to the weekly time frame for a second, and you can see from almost about September last year in 2020, this has gone straight up. So let's kind of grab a raw, see what kind of move it made. It came up from like just under $10,000 all the way up to 60. So that's almost this, or 65,000. So almost a 600% um, gain in just over 6 months, kind of thing. So that was, let's see, in April. So just over 6 months, kind of thing. You can see 600% move. So it's almost 100% month on month, which, as I said, it's highly unsustainable. You don't see those kind of returns in the stock market or in most markets at all. And as you know, what goes up must come down, needs a decent correction. And that's what potentially what you could be seeing right here, because if you've been watching my Forex videos, you understand market structure and how markets move. So what we generally see is a major impulse move followed by a correction move, which could lead into either a further kind of impulse move higher to what everyone is hoping for, seeing like $100,000 on this, which means it would be pretty much a 300% move from here, or just under 300%. But or are we entering a bear market where we've now kind of got the higher highs, higher lows, lower high, lower low. I kind of zoom out there a bit so you can see that. So you kind of got that, as I was saying, high high, higher low, move up for a lower high, and has now broken market structure and created a lower low. So what we could see from here now, instead of just having that massive major move up to the $100,000 mark, we could see a market structure of higher higher, higher lows. And that's why I've kind of marked out these points just here. Let me just delete this quickly and jump into the daily. So what I'm looking for in relation to this is areas of support and resistance. And let's see, it's one of the reasons why I drew these two lines in down here. So we could see that the market actually moves all the way down to those lows there, because from the high of the last bull market back in 2017, December 2017, it took about a year to get to its all-time low or in December 18 of just under $3,000. And that was a move of almost 84%, 83, 84%. So we could potentially see the similar thing happen from here. So if we saw a 80% or 83% move lower from its all-time highs now, we're probably going to see it drop down to around this area of $12,000. And you can see that's an area where price came up, struggled to break above, came back down, created those lower highs, lower lows, moving down, came back up, tested it again, came back lower, bounced off this area here of support at $10,000 before pushing higher. And on a weekly, you can see it actually never came back down to touch it. So it's an area which still needs to be tested. So we could slowly see that bear market take its effect and move lower all the way down to that $12,000 mark. But before we get there, we could see some price action movements in the lower time frame. So basing it off on just purely from a trading perspective, technical analysis perspective, we could see it move back up to here, to that $41,000 mark, or the $45,000 mark just around here, or up to this area here. And things you can use to actually kind of predict where it moves to is Fibonacci retracement. So you got kind of want to go from the swing high to the swing low, or swing low to swing high. I get confused sometimes when using that terminology. But you can see you want to go from the high point to the low point of that impulse move. So this is just on the daily time frame here. You can see it just completely collapsed. So you're looking at potentially a 38%, 50%, or 68% retracement to certain areas where we could see resistance before it moves lower. So could move back up to, like I said, there's 23%, which is just around that 41,000 mark. Let me put that back up again to there. 41,000, all that 45,000 I was saying, all the way up to this 50% of 48,000 mark just here. So kind of want to keep an eye out on those areas. Also could move up to the 68% mark there. So we're in a bit of a potential shift, so to speak. So what does this mean for investing in crypto now? Now, you don't necessarily have to wait until it completely crashes, because you don't know what's going to happen with the crypto market long term. It could actually, like I said, move higher from here. As I was saying, it's created an impulse, finally had that retracement, and then we could see the move up to that $70,000. The crypto sphere has changed since the last crash, where it was a lot of speculation from or negative reviews from institutions such as Goldman Sachs, JP Morgan, all those massive US banking firms, where they're saying it's just a scam, it's not legitimate, whatever. But there has been a paradigm shift now where institutions are taking it up. Companies are using it for payments, or they were in the case of Tesla and Elon Musk, where he did a 180 flip on what he said and taken it off. So having institutions acknowledge it as a store of wealth, we might not see that deep correction all the way down to the 87% mark down to here. We could see a bit more a shallow one um, to certain other areas. Another area you could kind of look out for is this area here where it's kind of struggled to kind of break lower. So we could see something different happen because now Bitcoin is being acknowledged as a bit of a store of wealth. So we might see some interesting things happen, as I was saying. So, like I was saying, what we can do here as an investment strategy is a few things. One of the people I follow, Cryptos R Us, George, great channel to listen to for crypto. If you aren't already following him, go over have a listen to him. I'm not sponsored to say that. I just want to say it because I actually like his channel. And he suggests a 50-25-25 rule of investing. So I'm just going to jump over to a Word document here. So, and that's having a balanced portfolio of 50% in Bitcoin, 25% in big caps, and 25% in small caps. Now, big caps are literally just anything over $10 billion in market value. Obviously, as the prices come down, that's going to limit how many of those coins are going to be considered big caps. So, you might want to be a bit more flexible with your rules of what you consider a big cap. Then 25% in small caps. And the reason why I'm saying this, why you want these smaller ones in your portfolio, is because they're the ones that typically make larger moves. So something you can consider to actually set up a portfolio for yourself for crypto. Now, I'm not saying put all your investment monies into crypto itself. Be diversified against different asset classes as well, like property, crypto, stocks, gold, bonds, cash, etc. It all depends on what you want and what your trading style is. So remember, guys, this is not personal financial advice. This is just theories, strategies, which I'm going to kind of incorporate and also for educational purposes. So just be clear about that. So something to consider there for having a balanced portfolio. And one thing which this market crash gives you an opportunity is the market has dropped significantly. So you can actually now pick up Bitcoin instead of at 40, 50, $60,000 a token, or you're getting more value for your dollar to pick up some of these cryptocurrencies or these assets. Let's jump into, say, Ethereum. As you can see here, it got up all the way up to just under $4,400. It's now sitting at 2,500. So that's a significant drop. I think like 40%, give or take. Yeah, 43%. So that's a significant discount. So you can probably pick it up and actually find some decent value in that token for long term. And one thing you actually do as it kind of dips is, especially after now you have had a massive dip, is dollar cost average. And that's actually a great investment strategy as well, not just with crypto, but also stocks and other investments. Not so much property because it's a bit more capital intensive. But if you can pick up solid assets at a cheaper price, and they over long term they go up, you are going to do better. Now, one thing I have to just mention with crypto, a couple of my friends and I discuss this as well. We're not experts, we're not hardcore believers or crypto fanboys in a sense. Um, the technology when it comes to crypto is amazing, and we wholeheartedly agree it is opening up so many new doors and decentralizing all kinds of industries and creating um, new paradigms. But as a currency, I still feel we need to see a bit of a phase or paradigm shift in its way it's kind of viewed and adopted until I kind of view it as until it's being utilized as an actual um, currency, as someone is actually being paid in crypto. Until we see that, then I probably wouldn't consider it as viable because it is so volatile. You can't necessarily say this car has a value of 3 Bitcoin when, as you can see now, from 1 week to the next, Bitcoin has literally jumped from 58,000 to 37,000. So if you're saying something was three Bitcoin a week and a half ago, kind of thing, that car would have been worth $150,000. Whereas now it's worth only only just over $100,000. So it's literally lost, let's say, like 25-30% of its value in a week and a half. So until crypto does stabilize in its price fluctuations, I don't see a widespread adaptation of it as being a currency. So just my personal opinion. Hate me if you want on what I've just said. Love me. Let me know what you think as well. Don't forget, always smash that like button. Leave me a comment. If you're new to the channel, hit the subscribe button as well. Join the in the content as well. Love to hear from you guys. Like I said, these are just my personal views and perspectives on what's going on. And one other thing you can actually do, because like I said, you can probably still see decent moves up and down with these crypto coins, um, is instead of going for 100, 200, 300% moves, go for smaller moves like 5, 10, 20%, and understand risk reward. Like I said, being a currency trader, it's something which I actually have to do a fair bit. Actually, look at the risk reward for it, for a token or for a currency, and understand what the potential gain of something is from when I'm buying it to what is potential reward. So let's take here up the top here, for example, it's $60,000. People would probably thinking, oh, it's going to continue going higher. Taking a trade here, think it's going to go to $100,000. Let's put that all the way up to 100. Not realizing that it could actually do a 80% retracement from that level all the way down. So say from there, 80% is almost bang onto that line there as well. So that is a risk reward of minus, or you're risking more than what you're going to be gaining. So that's not a good trade to take. So you always want to kind of have like ideas of where stop losses and stuff are in relation to your trade. So if you had it just below the recent low, which is like you can see kind of pushed up here, retraced down, then was making its move up higher again, that's a more suitable risk reward. So you're going for 3 or almost 4 times your reward to what you're actually risking. So you're risking, say, I think it's $10,000 to try and make $40,000. So that's not a bad risk reward ratio. So that's the kind of things you got to look at when trading as well, or investing. Or investing, taking a longer term approach and looking at it going up over the long term, whereas trading, you're taking a slightly shorter term view. So let's go to the 4 hour and get a bit of a better view on this. Oops. Let's go to the start of the year where that move was made. So you can see, let's say here, so it's kind of created that low here, came back up, created a double bottom from down here. You're going to take a trade from just around here, let's say. This is very, very rough, guys. Don't follow this completely. I'm just kind of trying to use this as an example. And let's say you just want to take it back to the recent highs, which is up here. So what you're risking here is risking just over $2,500 or just under $2,500 to try and make $10,000. So that's a risk reward of just over 4 to 1. So you've got to kind of understand those concepts of risk rewards, um, especially when trading. If you're just trading crypto, so you don't necessarily need to make um, 10 or 4 times kind of thing, and have like that's a significant portion. So you're buying, let's say, what was it, 31%, 31,000 to 40,000. That's a 30% return. So just things to consider when it comes to trading cryptocurrencies. Let's just zoom back in over here. So as I was saying, if you were going to look at this just here as a potential trade, taking it back higher to this 41,000 area, you could potentially wait for it to kind of draw on a trend line. This is just very, very rough, guys. Wait for it to kind of break this trend line before taking it higher, or you can see it's kind of created like a pin bar rejection just here. And you could potentially take it for a trade back up to an area of a high or a low. So just here, that's already just there. So you're going for like a 2 to 1. Say go there, going for a 2 to 1 risk reward. So you're risking, say, $2,500 again to try and make 7,000. So, and buying it at that level of 38,000 to the area of 46, that's $8,000 change. That's just under 25%. So that's a decent return. So you might have to start looking at that when trading some of these coins. Now you can see live action has just dropped there all of a sudden, and you can see it's make some major moves, very short time frames. So something to always be careful when it comes to crypto. Um, yeah, so if you have any questions about that, guys, don't forget, drop me a comment, let me know what you think. I'm going to start doing a few more videos on and relating to crypto. Um, it's going to be slightly different now because obviously I think we have exited the bull market, now going to a bit of a bear market. But there are still projects and tokens that you can still take advantage of medium term, which still present themselves as decent projects. So obviously we've got Bitcoin and Ethereum, which are the two biggest ones, which everyone knows about. Ethereum itself is facing a few issues, or has been facing a few issues over time with congestion on its platform and high gas fees, which everyone, if you're experiencing crypto, you already know about that. And there's obviously a lot of other tokens and other projects out there which are kind of vying for Ethereum's place as kind of number two. Um, and it's all about the smart contracts kind of plays. So other tokens which you can kind of look at are the Binance Smart Chain, which is actually doing quite well against Ethereum. It has done very, very well in the past year and a half, 2 years. Cardano, which is a great project, real threat towards Ethereum as well. Polkadot, which I'm actually looking at myself for other projects which could be aligned with that. I'm actually going to do a video on that in the next couple of days. Um, and Polygon as well as Solana. So some very good projects there, which still show quite reasonable potential over time. So don't forget, guys. Hope you've enjoyed the video today. Bit of a rushed one, a lot of rambling today as well. Sorry about that. It's quite late at night for me here in Australia. But I hope you found value in what I've actually put out there for you, and love to hear what you guys think. And I'll catch you guys again on the next video.